Hi, and welcome to Your Prosperity, a podcast series on financial topics including tax, wealth creation, superannuation, lending, audit, and many other things that we deal with here on a regular basis at Prosperity Advisors. As with all financial podcasts, any advice you hear in this is general in nature and not to be relied upon. Please contact us for any specific advice. Hi, and welcome to the podcast. It is the 17th of March, 2023, St. Paddy's Day. I'm here with Charles Yuan. Charles, a resident tax expert, one of the experts here at Prosperity, knows all things tax, and him and I have a mutual love for EVs and the benefits of EVs in buying through a business, which is part of what we're talking about today. So what we're talking about today are fringe benefits tax, FBT, and there's benefits. There's benefits in FBT, in fringe benefits tax. So we're going to talk all about that. Charles, thanks for joining us.
Thank you, Brendan.
FBT, I guess, business owners should be aware of it, would know about it. Not all businesses probably even realize they do it sometimes. They've probably got cars that they make personal contributions for and things and don't realize it's actually part of the FBT legislation. Some of the interesting things, I guess, FBT, it's a interesting quirk. The FBT year ends 31 March, which is why Charles and I are here today, and we're going to have a chat to you about that. Charles, before the end of the month, 31 March, coming soon, what do businesses need to do if they're not already doing it?
That's a good question. Given it's coming very soon, every business owner, if you have any sort of fringe benefits, these are the things you have to think about. Logbooks. Do you have logbooks for your cars if you want to claim business use? Do you have any salary sacrificing arrangements with your employees? If anyone's talking about it, it's good to have that in place before year end. So it's in place for the year. And interesting one for small business is portable electronics. Do you need a new laptop for your employees? Why not buy in
Mobile
now?
Phones,
Mobile phones, monitors, everything. If you buy in now, it'll be within this FBT year, but you also get the temporary full expensing, which, reminder, runs until 30 June this year.
So you get a big deduction on it as well. A step back from that, that's the bit stuff we look at, but I probably should go through, I guess, FBT, what it is. It's fringe benefits tax. Correct me wherever I'm wrong here, Charles, but essentially, if an employee receives something that isn't paid to them as part of their wages, it's a fringe benefit, and therefore you pay fringe benefits tax on that. So my history is obviously not going to be entirely correct, but let's call it 40 years ago, companies used to just give cars to employees and no one would pay tax on it. The company got a deduction, and the tax office kind of went, hey, hold on, we're missing out here. We need some money for that. That's just cheating because they're getting a 20 grand benefit, but they're not actually paying any tax on it. We need to stop that. Hence the birth of fringe benefits tax and the regime that effectively, sort of taxes that. And it's been around for many years and everyone's pretty familiar with it. But the bigger things, I guess, are, what's small business, Charles? What's the bigger ticket items? Cars, everyone knows about that. Whether it's a logbook method or the statutory method, which the statutory method is sort of if you don't, for those at home, if you don't have a logbook and there's a higher private use on it, if the employee contributes back 20% of the value of the vehicle every year, there's no FBT payable on it. And FBT payable is always at the top rate. So there's a complicated calculation that goes in the background to gross up value, etc. But for simplistic terms, let's just say it's taxed at the top rate. To avoid that, you can have logbooks and etc. etc. Apart from cars, common sources, FBT, small business, what have we got, Charles?
So in my experience, for most small businesses, aside from cars, which is by far the biggest one, Brendan, by far, and the one that ATO always cracks down on. Other ones are entertainment. What is entertainment? It's where you provide your employees with meals or any sort of recreational benefits, whether you've paid for it as a business owner or whether you reimburse your employees as an expense payment. So that's actually a fringe benefit. Car parking is another common one. And reminder, car parking is not you reimbursing employees for parking at the shopping center. It's where you provide a dedicated car space. Either you lease in your business or you lease in a separate parking station. And Then other minor ones are generally expense payment benefits, which, as the name suggests, you've make a payment of an employee's expense. So they submit an expense to you, you reimburse them. That's an expense payment benefit. And certain types of benefits can be subject to FBT. Those are by far the common ones.
Let's get back to the first one. Cars. What? Not EVs. Let's come back because that's a separate topic that you and I love. I know. Let's talk about that in a minute. Apart from EVs, the usual car stuff. Let's go through that. So I gave you everyone a bit of a brief update, I guess, on statutory method logbook. But what other exemptions are there? There's a few others, obviously, that I'm leading you into this. There's a few we know about. Talk us through cars and FBT.
Yeah, cars. It's always an interesting one, Brendan. I'm
sure. What is a car?
Exactly, and that is by far the most important question when you come to answering question, do I have a car fringe benefit? What is a car? Well, there is actually a definition under the tax legislation of a car, and that is any vehicle that's under 1 ton carrying capacity and carry less than 9 passengers.
Yep.
So,
and it's less than 9, isn't it? I always thought it was 9 and less, but it's less than 9.
It's actually 9 passengers, which means a 10-seater vehicle. So a minivan that carries 12 is not subject to car fringe benefits.
Yep.
And interestingly, that's probably the reason dual cab utes is sold out everywhere, is dual cab utes has a special rule where if you meter in a certain way, there are exemptions. But what people don't realize is that 1 ton still applies. So a dual cab ute that's under 1 ton is still a car for car fringe benefit purpose.
And there's certain exemptions you can get on those, but obviously a 1 ton ute, even though it's not a car, to focus on that. If you're providing a ute that has a 1 ton carrying capacity, space cab, single cab, whatever it is, 1 ton payload capacity, that's not a car, but that's got separate rules, isn't it? That's not
correct.
That's as long as it's provided to an employee and et cetera. Well, talk us through.
Yeah. So when I first started in practice, there was this rumor going on around the general population, probably pub talk, that if you provide a ute, because it's not a car, you don't have to pay FBT. I can guarantee you the ATO cracked down on that. The ATO has cracked down hard on that. And what they've done is, even though you provide a 1 ton ute, it's not a car, they catch it under what's called a residual benefit. And as the name suggests, residual means everything else that's residual that's not already called by another section. So providing a 1 ton ute is still a fringe benefit. It's not a car fringe benefit, but it's a residual benefit.
But there's big benefits. If you're providing a ute to someone who genuinely is using a ute for work, there's obviously some still concessions there and some benefits.
Yeah, that's right. And the reason why it's still so popular is there is this exemption out there. Okay? And the exemption basically says, if an employer provides a ute to the employee, and the employee only uses it for traveling between home and work, traveling for business-related reasons, and minor incidental private travel. If you can tick all of those boxes, the ute is actually exempt. Doesn't matter whether it's a car fringe benefit or residual benefit, it can actually be exempt from FBT.
And the big benefit in that, the really big benefit there is, normally if you and I drive to and from work and it's a fixed location, that's a private trip. If you're provided a vehicle for work, the to and from work in that scenario is a work trip. So if you're driving to and from work with minimal deviation, there's some rules around it, etc., incidental private use, but to and from work and then out to sites doing stuff, presumably carrying stuff in the back a lot of the time as well, then that to and from work becomes a work trip, which is a huge advantage over a normal FBT sort of arrangement where to and from work is not a work trip. So big benefit there if you're providing 1 ton utes and things like that to staff to use.
Absolutely. And
but even if you're just providing a car though, that say a 7-seater whatever to one of your staff, there's still a benefit in that. I mean, if you're salary sacrificing that or you're providing it to them as part of it, as long as they contribute back 20% of the vehicle, there's still a benefit. So a lot of my clients, I know a lot of our clients would be utilizing that, particularly the medicos, I guess, where you're providing a vehicle to that said doctor, dentist, whoever. It's, let's call it a $50,000 vehicle. We get to claim the depreciation on it, the interest on it, the rates, the rego on it, the insurance on it, the fuel on it, all the other costs. And as long as the employee contributes back $10,000, 20% of 50 grand every year, then there's no fringe benefits tax to pay. There's probably 15 grand worth of deductions every year, and 10 grand of income is a $5,000 tax deduction, which can be very, very beneficial when calculated and used the right way. So there's absolutely a lot in car fringe benefits, in my opinion.
That's right. That's right. And also don't forget salary packaging benefits as well. So even if you're not a business owner, there's still potentially, benefits to be had by salary sacrificing for a, novated lease. And that's probably why it's so popular, Brendan. Novated lease.
Absolutely.
Our guys are busy, aren't they, with novated leasing?
Yeah, so our team in Salary Pack, they obviously do a fair bit of this as well. So there's a little plug. Good work, Charles. Worked that in nicely. But yeah, salary packaging, we've got some guys who organise that and do it for businesses. So get in contact with them if you need to. But massive benefit, massive advantage. Entertainment was the other one, Charles. Let's run through that. Christmas parties,
yeah,
et cetera, et cetera.
Love that one. Love that one, Brendan. And the reason why is throughout my accounting career, everyone that doesn't understand tax always think Christmas parties are exempt. Now, it is technically true, but
if done the right way.
If done the right way. And the way you need to do it is the ATO has what's called the actual method and the 50-50 split method, right? And for those who don't understand what those means or the implication, where you use the 50-50 method, the ATO says, okay, take all of your entertainment expense, draw a line down the middle, half of it is subject to FBT, half of it's not. Problem with that is you don't get your exemptions for Christmas parties.
Do you mean the minor and infrequent benefits there, Charles?
And that's the one. If you want to be technical, Brendan, section 58, 58P.
Let's not lose the listeners.
Yeah. And so what you need to do then is, if you want to claim your exemption for the Christmas party, you have to use what's called the actual method. And to do the actual method, it is a little bit more time consuming, because what you need to do is detailed record keeping of each event, how many people attended, how many employees, how many non-employees, what was the cost, and what was the per head cost as well. So once you work all that out, then you look at what's called the minor and infrequent exemption. If you provide something that's less than $300 per employee, and it's provided only on a regular and infrequent basis, the ATO allows you to treat that as exempt from FBT.
Charles, that's entertainment. Excellent. Car parking, expense payments, give your accountant a call, give us a call, talk through that. I want to move on to a couple of things. Good news. EVs, Charles, we love this part of it. Fringe benefits legislation deals with providing a benefit to an employee that isn't wages. Big one that's come out, you and I have been chatting a lot about. I guess the Labor government pitched this pre-election, got through the election, finally got it through the Greens, got it through the upper house, dropped late November, December, whenever it was. Electric vehicles, plug-in hybrids, go, Charles, talk us through it.
Plug-in hybrids, so the electric car exemptions, full battery electric cars and plug-in hybrids. Yes. Plug-in hybrids, though, only until 1st of April 2025. So we have another 2 years to buy your plug-in hybrids.
And that's important if there's a delay on the order as well. If it's an 18-month delay, you mightn't get it in time.
Yes, and it is very important. My electric car, Brendan, is still on order. Haven't heard a peep about it. So, given the delivery time frame, maybe people want to have that flexibility on whether they want to go full electric or plug-in hybrids. So big criteria on that is the car must be bought and delivered after 1st of July.
Available for use. Yep, absolutely.
And available for use. and that date is 1st of July 2022. So it has to be after that date.
Yep.
And the cost must be less than $84,916. Why
Which-
that exact number? That's a luxury car tax threshold. So if your car is subject to luxury car tax,
Luxury car tax for fuel efficient vehicles. Yeah.
for fuel efficient. So if it's subject to luxury car tax, it's out of the equation.
Which is interesting because it's different to the luxury car tax we talk about in accounting, which is the tax depreciation of luxury car tax, which isn't extended for EVs. That's just at that 64,000 something. That's not linked to the same amount. This is a luxury car tax, the tax applied at the purchase of the vehicle for a fuel efficient vehicle, and that 84,916.
That's
as long as it's under that, happy days.
Yep.
And obviously there's a few other caveats. So it has to be purchased by a business and provided to an employee.
Correct.
Can be salary sacrificed.
Can be salary sacrificed.
And that's the drive away GST inclusive price, isn't it?
Correct. So whatever that price is, if it's right up to the 84 limit, there's a car limit on the GST, $5,885 this year.
Yep.
You're capped at that. If it's below 64,000 or so, then you get your full GST back as well. So big benefits there for businesses.
Absolutely. And it can be salary sacrificed, as we said. And the big thing about that is, so what the legislation is, it's not really saying it's tax deductible. It is tax deductible, but it's saying there's no FBT that will be applied to it. So the big benefit, I mean, if you're using it 100% for work use anyway, it's deductible as it is. So it's great that it's an EV, but it's no real additional benefit. Where this really comes into play is if you're providing it to an employee or an associate of an employee, they can openly say to the tax office, it's actually provided to me through my business as part of working there. My wife drives it and it is used zero for business. And there is no FBT.
There is no FBT, and that's what's make this such an attractive deal. As an example, right? For someone on, let's say, $150,000 salary, you can get a Tesla Model 3, salary package it over a 5-year loan or 4 or 5 year loan, and you save, get this, almost $40,000 in tax.
And that's on a $70-something thousand vehicle.
60-something thousand vehicle. 60-something thousand vehicle. You save almost $40,000 in tax. Of course, it will end up costing you a little bit more than the car value because
there's interest,
finance costs. That's right.
Yeah. But no, not fuel. Sorry, interest and rego and insurance and all of those things go on it. So, but essentially, instead of costing, let's call it 90 grand over 5 years, it's cost you 50, which is still phenomenal. So if you're looking at, and the way I look at it, if you're looking at an EV that, like for like, let's call it 15 grand more than the internal combustible engine. If it's used privately and you have the ability to buy it through your business and provide it to yourself as an employee or to one of your employees, maybe through salary sacrifice or something like that, it's a huge benefit. That's just tax saving. It's fantastic. It's legislation. You can do it. There's no problem with doing it. There's no major caveats apart from buy it in the entity that is provide it to an employee or to an associate of an employee, and it's under that 84,916. And it's an EV, it's all plug-in hybrid for the moment.
That's right. So it really just comes down to, do you need a new car?
100%. And even if, so I was actually caught up with someone today as well. Even a bigger, even a benefit, a simple thing that, if you'd already just bought an EV and your accountant wasn't on the ball and wasn't telling you about it, and I happened to run into someone today, and they're not my client, or they would have known all about this, but they just recently bought a Kia EV6. They look at using that in some way in the business. And I said, well, why didn't you buy it in the business? And they said, oh, I didn't realize, should I have? And I said, yes. And in fact, what you should do now is sell it to your business, provide it to you as an employee. You are actually going to be using it in some ways in the business. Sell it to it, wear the stamp duty, but get the concessions. It's a win-win.
Yeah, and that fully works because even for second-hand vehicle, the requirement is as long as when it was first purchased, it was below that threshold. It's tick all around. And
originally purchased after 1 July 2022.
Correct.
Yeah. So there's caveats, guys. Don't jump in and just do it. But look, we've outlaid pretty much all of it. But for 30, 40 grand of tax savings. Don't just go, oh, the podcast was enough, I can do it. This is not financial advice for you specifically. Ring us, ring your accountant, get the right advice on it, do it correctly. The paperwork is important. If this is an $85,000 vehicle, your benefit is zero. You cannot do it. Well, you can, but depending on private use, it's just a normal car. So really make sure you get this right. Really important. Charles, a few other things in FBT. Should we talk about? I guess there's charities, not-for-profits. So there's people who work at public benevolent institutions and hospitals who can salary sacrifice cars. They might say, I already get a benefit, I salary sacrifice. Yes, that's great. But if you want to do an EV, you can do it outside of that. So this is sort of on top of that. But yeah, if you're working at a hospital, public benevolent institution, charity of some sort where you can salary package and you get that concession, I guess, that you're allowed through those. Most people are, but if you're not and you work at a public benevolent institution, you should be salary sacrificing and utilizing your full cap that you're allowed to, because it is free money. Absolutely do that. That's a benefit of working at one of those places. Round it out for me, Charles. What are some other areas people should be careful of in FBT?
Yeah, just a couple of things people should be careful of. Travel and accommodation. That's one area that the ATO does look at from time to time. And the question comes down to, is it really a work-related travel or is it a holiday? So if you send your employees off on an all-expense paid trip for work well done, but it just so happened to send them off to a seminar as well, is it really you're sending them to a seminar, or are you gifting them a holiday?
But if you're sending them to a seminar and they go to a seminar, which is the primary purpose of their trip, of course, Charles, if they decide to tack on a small holiday on the back end of it,
that's when you need to talk to Brendan and get some advice.
Yeah, so there's careful ways to do that to make sure you do it right. But your primary purpose, is there a benefit? Is there tax deduction for certain parts of it? Not all of it. Obviously, there's a fair bit involved there. We won't get involved too much into that, but absolutely an area to be careful of.
The other one, quite common for business owners, luxury cars and boats. ATO has, for some reason, they hate boats. So where your company...
Do you mean the small mum and dad grocer shouldn't have a boat in their business?
Well, why not? Why not, Brendan? If you have a luxury car or a boat in your business owned by either your company or your trust, you need to consider, is there any private use, and make sure you report your fringe benefit properly.
Yeah, and that's red flags, isn't it?
That's right. And another red flag is not having proper records. So if you have a car and you want to claim the business percentage, make sure you have a logbook, and then make sure you have employee declarations. And then one last area people really need to be careful of. It's something that, it's very easy to miss, but FBT also applies even if you don't provide the benefits to your employee directly. So let's say you have a top salesman, they sell millions of dollars of your supplier's products, and they give them a nice fancy gift for being a great employee of yours. Just be very careful. That may also be subject to FBT, and get some advice on it. Yeah,
so a supplier of yours giving your employee a gift can even cause you trouble, which sounds wrong, doesn't it? But yeah, you got to follow the legislation. Thank you, Charles. Appreciate it. As always, talking through the benefits of fringe benefits tax. I like our catchy title. I'm going with that. For anyone who wants to catch up with Charles, find a bit about more, or catch up with me, follow the links on the jump on our website, prosperity.com.au, or email Yuan at prosperity.com.au, and bcampbell at prosperity.com.au. Follow the links on the website, follow the podcast, give us some likes and shares, tell your friends about it. And if you've got anything out of this and you're in some capacity to be able to do so, if you have a business, you should have an EV. If you can meet those requirements, it's a win-win. Thanks, Charles.
No problem.
Thanks for joining us for today's podcast. Hopefully you liked it, and if so, please give us a few stars, like and share. And if you'd like to follow the series, please subscribe and pass any information on to your friends as well if you think they might like it. For more information about who we are, head to prosperity.com.au and follow the links.